Something unprecedented just happened in the silver market. And I need you to understand how serious this is. Major dealers across the United States have done something they've never done before. They've stopped selling physical silver. Not because they don't want your money, but because they literally don't have the metal to sell you. Think about that for a second. These are businesses that exist to sell you silver. That's how they make money. And they're turning customers away. In the next 10 minutes, I'm going to show you exactly what's happening right now, the hard data that proves this isn't hype, and most importantly, what this means for your money, whether you own silver or not. Because what's happening in the silver market right now is a warning signal about something much bigger in our financial system. Let me show you what's actually happening on the ground right now. APMEX, one of the largest precious metals dealers in North America, has suspended sales on multiple silver products. SD Bullion shows out of stock on American Silver Eagles. JM Bullion has delivery delays stretching 4 to 6 weeks on products that used to ship in 3 days. Now you might be thinking, okay, so some dealers are running low. That happens, right? But here's what you need to understand. These are not small boutique shops running low on inventory. These are operations that move tons of silver every single day. They have sophisticated supply chains, relationships with major mints, and warehouses full of metal. Or at least they used to. Let me give you the numbers. The U.S. Mint sold 5.5 million American Silver Eagles in January 2024 alone. That's massive demand. But by mid-2024, they had to do something they rarely do. They rationed sales to authorized dealers. The Royal Canadian Mint reported silver maple leaf sales up 45% year over year. But production can't keep pace. The Perth Mint in Australia had to implement allocation systems for the first time since 2020. And here's how fast this escalated. In week 1, premiums on physical silver started climbing from $3 or $4 over spot price to $6 or $7. By week 2, major dealers were limiting purchases to 500 ounces per customer. Week 3, products went from low stock to sold out overnight. Week 4, we started seeing full sales freezes on select items. That's where we are right now. But here's where the story gets really strange. While physical silver is vanishing from dealer shelves, paper silver on the COMEX is trading around $30 to $32 per ounce. You can buy silver contracts all day long. You can trade them, sell them, flip them. But try to take actual delivery of physical metal? Good luck with that. Let me explain what's really happening here because this is critical. There are actually 2 completely different silver markets operating right now, and most people don't even realize it. Market number 1 is paper silver. This is what's trading on the COMEX, in SLV ETFs, in futures contracts. This is where the spot price you see quoted everywhere comes from. There's unlimited supply of this paper silver. It's easy to buy, easy to sell. Price is $30 to $32 an ounce. Market number 2 is physical silver. Actual coins, bars, and rounds you can hold in your hand. This market has limited supply. It's increasingly hard to buy. And the real price, after premiums, is $35 to $40 per ounce. The gap between these 2 markets just hit levels we haven't seen since the COVID panic in 2020. Physical premiums are running 20 to 30% above spot price. Stop and think about that. If silver is supposedly worth $30, according to the spot price, why are people paying $39 for a silver eagle? And here's the number that should terrify you. According to SilverSeek, the ratio of paper silver claims to physical silver available for delivery on the COMEX is approximately 250 to 1. Read that again. For every single ounce of actual silver sitting in COMEX vaults, there are 250 ounces worth of paper contracts claiming ownership of that same metal. What happens if even 5% of those paper holders decide they want real metal instead of a contract? The math doesn't work. There isn't enough physical silver to fulfill those claims. Not even close. So why is this happening? This isn't random. This isn't just a supply chain hiccup. This is the result of multiple massive forces converging at exactly the wrong time, and almost nobody saw it coming. First, industrial demand for silver is absolutely skyrocketing. See, silver isn't just a shiny metal people collect. It's a critical industrial commodity that modern technology can't function without. Solar panels need it, electric vehicles need it, 5G infrastructure needs it. The Silver Institute projects that industrial demand will consume 60% of all silver mined this year. 5 years ago, it was only 48%. Let me make this concrete for you. A single solar panel uses about 20 grams of silver. Global solar installations are projected to hit 500 gigawatts in 2024. Do the math on that. That's roughly 150 million ounces of silver just for solar panels every single year. And that number is growing as countries race to meet climate goals and energy independence targets. Second, mine production simply cannot keep up. Global silver mine production has been essentially flat for the last decade. We're stuck at around 830 to 850 million ounces per year. But demand? That's exploded from 900 million ounces to over 1.2 billion ounces. Where's that extra 350 million ounces coming from? Above ground stockpiles. The silver that was already mined and stored, and those stockpiles are running dry. Third, investment demand has surged. When people lose faith in paper currencies, they move into hard assets. We've seen a massive shift toward precious metals as inflation refuses to go away, and banking confidence took a hit after those regional bank failures in 2023. Retail investment demand is up 35% compared to the 5-year average. People are scared, and they're buying metal. And fourth, this one's not being talked about enough. Governments and central banks are quietly stacking silver. While gold gets all the headlines, silver is coming along for the ride as emerging market central banks build up their strategic precious metals reserves. They know something. They're preparing for something. So what does all this mean for you? Let me give you 3 possible scenarios for where this goes next, and I'll tell you which one I think is most likely. Scenario 1 is the temporary squeeze. In this scenario, premiums ease up as mints ramp production, investment demand cools off a bit, and inventory normalizes over 3 to 6 months. Prices stay elevated, but supply stabilizes. This is basically what happened in 2020 and 2021. I'd put the probability of this at about 30%. Scenario 2 is the extended shortage. Physical premiums stay elevated for 12 to 24 months as structural supply deficits persist. Industrial demand keeps growing faster than mine supply can respond. The two-tier market becomes the new normal: cheap paper silver, expensive physical silver. We're likely heading into this scenario. I'd put this at 50% probability. Scenario 3 is full market dislocation. This is where physical demand completely overwhelms the paper markets. We're talking COMEX delivery defaults or a massive spot price adjustment to reflect reality. Physical premiums exceed 50 to 100% over spot. Silver becomes effectively unobtainable at quoted prices. This is the squeeze scenario that precious metals investors dream about. It's less likely, but not impossible. 20% probability. Now let me give you some straight talk about what you should actually consider doing. I'm not a financial advisor. This is an investment advice. But here's how to think about this intelligently. If you already own physical silver, hold tight. Don't panic, sell into this market. Your metal just became more valuable relative to all those paper claims out there. Consider this validation. If you were right about holding physical, this shortage is proving exactly why you were right. If you're trying to buy silver right now, be strategic. Don't pay insane premiums out of FOMO. Yes, premiums are high, but 40% over spot is extreme. Consider generic rounds over premium products like Eagles if you just want silver exposure. Check multiple dealers. Be willing to wait for better entry points. And please, for the love of everything, don't buy from random dealers on social media offering below market prices. The scams right now are everywhere. If you only own paper silver through ETFs or contracts, you need to understand the risks. SLV and other ETFs may hold silver, but you don't own it. You can't take delivery. In a real crisis, there's counterparty risk. This doesn't mean paper silver is worthless, but it means you need to know exactly what you own and its limitations. There's a difference between owning a claim on silver and owning actual silver. And if you're on the sidelines watching all this, stay educated. This silver shortage is a symptom of much larger monetary and economic shifts happening right now. Whether or not you own silver, understanding commodity markets, supply chains, and the difference between paper and physical assets is valuable knowledge in an increasingly uncertain financial world. Here's the big picture you need to understand. We're watching a market transition from abundance to scarcity in real time. Whether this is temporary or permanent depends on factors nobody can predict with certainty: mine production responses, industrial demand trajectories, economic policy decisions, and mass investor psychology. But one thing is absolutely clear. The era of unlimited physical silver at modest premiums may be over. What we're seeing right now could be the new normal, or it could be just the beginning of something much bigger. Think about what's actually happening here. The dealers who are freezing sales aren't doing it for dramatic effect or to create artificial scarcity. They're doing it because they don't have the metal. They can't get the metal, and they're not sure when they will have the metal again. These are businesses that make money by selling silver, and they're turning away customers. That should tell you everything you need to know about where we are in this cycle. The disconnect between paper and physical markets, the 250 to 1 leverage ratio, the industrial demand tsunami, the flat mine production, the draining stockpiles. These aren't conspiracy theories. These are facts, numbers you can verify yourself. What happens next depends on how people respond to this information. If the masses stay in paper and ignore physical scarcity, the two-tier market deepens. If there's a rush to convert paper claims into physical metal, we could see a real crisis in price discovery. The paper price could be $30, while actual metal sells for $60 or $70, if you can even find it. This is bigger than just silver. This is about trust in financial systems, the difference between real assets and paper promises, and what happens when reality collides with decades of market manipulation and leverage. If you found this breakdown valuable, subscribe and hit notifications because this situation is developing rapidly and I'll be tracking every major development. Drop a comment and tell me, are you holding physical silver, trying to buy, stuck in paper, or watching from the sidelines? I genuinely want to hear your perspective in your situation. And if you want to go deeper into precious metals markets, supply chain disruptions, and monetary policy, I've got videos linked in the description that connect all these dots. This story goes way beyond silver. It's about trust, scarcity, and the future of money itself. Thanks for watching. Stay sharp out there.